For the last 3 months, the dollar has been always falling way down, way highly down. And almost since we started 2025 until today, the dollar has fallen by almost 10%. But the question, what's causing the dollar to fall? A reserve currency that we all know has a reserve currency to the rest of the world is highly plummeting the way falling down. The question is like, what's causing that currency to be falling down, like for real? Because today the way it looks like the dollar is way falling behind other currencies, against other currencies, and something that's like a pinnacle to be looking at. Well, in this video, we're going to be breaking down the reason why the dollar is falling down, and yeah, we're going to be breaking it down. Okay, ever since Trump took presidency from I would say from the end of January or at the beginning of February, the dollar started permanently falling down. Well, one of the major key factors will be like policy uncertainty. Well, in the first place, Trump implemented tariffs. Okay, when he implemented tariffs this way, he almost made that tariffs saying like there was a baseline of 10% tariffs, and specific countries they had almost we'll be calling a specific tariff according to that country. Let's say a 10% or a 40%, depending on what country you'll be talking about. We once saw when he tariffed countries like China for over around when tariffs went insane to almost 120% tariffs. They had to go into talks. Well, this forced the dollar to be almost falling off by 4%. There was a decline in the dollar in the trading exchange. The dollar pulled down by almost 4%. And such kind of uncertainties are still taking place until, because very soon, as of now, today, pencil to be like by 1st August, we are hoping to see new tariffs coming in that also like cause more uncertainties in the market, well as keeping the dollar off. Another issue for the fall of the US dollar will be, well, the economic slowdown projection. The US dollar in 2025, in the beginning of 2025, the US dollar was predicted to be going high as 2.2% in its GDP. However, today's was going to be around 1.6. That's how highly is predicted. This has made many investors to be getting kicked off and feeling like the US dollar isn't worth investing in. I would say it's among the factors that we'll be talking about, because the way the US dollar has been way falling down, and final predictions have been making it to be way highly non-attractive for investors to be investing into the US dollar in the past. One of the main factors, like the main factors actually, a factor I would be starting with would be US debt. US debt today is approximately heading for around $37 trillion, and this has created uncertainties among the biggest economies, asking, is this the road of no return? Is this the road of where everyone feels like the world is heading in the wrong direction in the first place? Because there was debt running for over $37 trillion today. If you look at, according to its GDP, it's around, I think, 120% against its GDP. This has created uncertainties in investors, where how long can the US borrow like this without thinking of recognizing its debt and finding a solution on its debt. This has scared many investors from investing from the US dollar, and this has highly provoked many investors or the fall of the dollar in the first place. Because if you look at the 37 trillion today and the new factor, there's one more factor, how the Trump policies are coming up. See, Trump, when he was campaigning his campaigns, he campaigned asking for a smaller government to decrease the what I call the spending of the US government. However, he did the opposite until today. So if you look at the big and the beautiful bill, that's likely to be adding almost $3.3 billion in the long run in the US debt just alone, because canceling, like, let's say, stopping income taxes and stopping income taxes and borrowing more through this bill, this has conducted a lot of uncertainties how the US dollar is going to go, and this has created weakness in the US dollar mostly, because adding another debt on the US dollar, because I would say, like, in the short run, it's good for US economy. In simple terms, it will boost the US economy in the short term, we would say, because the stimulus that's gonna be caused by this bill is just for the, I would say, for the term Trump's is taking for right now. It would work for at least, let's say, for 1 year or 2 years. But in simple terms, in the long run, it's gonna be highly not good for the US economy. But to be honest, I'm gonna be honest, it's not the best thing that someone could come up and say that it's gonna attract investors. In actual sense, the opposite. In actual sense, it's gonna keep investors falling off because the government is overspending and doesn't show any solution of coming back to thinking of how to handle back its debt. So it's something that's gonna be highly keeping investors away from using dollars in the first place. Geopolitical tensions. If you look at the Middle East, geopolitical tensions rose in the first place. The Israel-Iranian war attacks that took place. Well, this also played a big role in the fall of the US dollar. So when Israel attacked Iran in the first place, I'm not gonna say like the Ukraine and the Russian war, yes, it has been taking place, but when it came to the Middle East, well, the geopolitical tensions made it want to be scarce. And here's the funny part. People used to, or countries used to be running for treasury bonds, especially in the middle of wars, but unusual certainties in the market exchange. There was, instead of buying treasury bonds, people were buying what I would be calling treasury metals, especially gold, silver. So this made a decline in the US dollar. There was, whenever you create panic within different countries, let's say, they were expecting them to be running for maybe treasury bonds for the safe havens. Well, it was the opposite. People were running for gold, metals, and this highly caused the fall in the US dollar. As for now, the US dollar has fallen by almost 10% in the first place. The unusual, what we call the unusual market dynamics. Well, yield spikes used to attract investors in the first place. Yield spikes, these are, I would say, commission that come on treasury bonds or the T-bills, the 2-year bond, the 10-year bond, the 30-year bonds. But in 2025, that has been the opposite in the first place. The treasury bills couldn't make it in the first place because today the yields are running for almost 5% in the first, to understand what's taking place. And 5% is a very, very attractive deal for any investor. Be like, I'll be buying the bonds, But the question is, why nobody's buying? The Fed had to come up and buy up the bills, actually, and buy up the treasury bills itself. That means like they had to stimulate the government. This has left uncertainty because it's not about how attractive the yields are, but it's also about that. This brings back to our first, among my first points, like I said about the US debt. Because the US debt has been highly falling back, like really way back. If you look at the mood rating, how it rated it, now it has almost 2 A's. It was taken down. Mood last rated the US bonds, that was almost 70 years ago. So coming out rating it to almost having it 2 A's. It had over 3 A pluses, but today it has 2 A pluses. Meaning it's still a safe haven, but not as certain as we were, like how confident it used to be in the first place. Today it's full of uncertainties, saying that there was what I would be calling in the first place that US bonds or US treasury today are no longer safe as they used to be in the first place. So it's becoming something that is really among the latest factors that I'll be talking about. We'll be talking about the relationship between Powell or Jeremy Powell and Trump. Well, the relationship between Powell and Trump becoming way increasingly creating a lot of uncertainties, a lot of fear in the market, because their relationship is kind of I don't want to call it bored. It's kind of getting sour in the first place. So to understand what I'm trying to say, like the relationship between or the fight between Jeremy and Trump should cut the interest rates, and pause like saying I see no signs of why you should be cutting interest rates. We are having uncertainty of the upcoming tariffs, which we may understand because the inflation is running almost for 2.3, 2.1%. That's the US inflation. But if the tariffs kick in on less on 1st August, well, it's going to make goods, US goods like exports or imports coming from the foreign countries to the US expensive for the US citizens. And this will cause what they call high inflation for the US US economy. That's why Paul is insisting for not cutting interest rates is because of the uncertainties that the Trump policies. On one factor, you could say he's right, but however, on Trump's factor, like in the eyes of Trump, that isn't working. Depends on one side you feel like supporting either Trump or Paul, but above all this hasn't helped for the US dollar to be working well. The US dollar has really fallen down. That has caused the uncertainties if it will ever go back to history, or to go back above 100. So as for now, the future is to tell. Okay, one more factor that I will be bringing out it's not a real factor, but it's among the real factors. Well, the rise of the BRICS. The BRICS had a summit, I think I would say last month or last week, a few weeks back. The presence of the BRICS and the BRICS influence. The BRICS have been trying to trade their own currencies like in their home currencies between the BRICS members. The presence of the BRICS has created almost, because today the BRICS almost control, I would say, almost 70% of the agriculture foods, and they almost control, I would say, almost it's almost said to be almost around 50% of the economic trades. So BRICS is not something that would be taken to be like a joke. Yes, they're not like really that organized yet, like to be way impactful for the US, but almost 52 countries are applying to be joining the BRICS. We have what they call the member BRICS. We have what they call the partner BRICS countries. There are a lot of countries that are like trying to join the BRICS in the first place. So this is causing the US dollar to be highly, and these are countries that are ready to be trading their home currencies. And these are countries that are no longer buying treasury bond. These are countries that are buying silver, buying gold, piling up gold. If you look at China, if you look at Russia, if you look at Brazil, these are countries that are highly buying metals instead of they will be buying treasury bills. Another factor that I will be talking about that has caused the fall of the US dollar is when the US seized the Russian assets. This could be a factor that happened a long time ago that couldn't be showing up right now, but it created monster fears. We have seen countries like China selling off their US debt little by little. By 2013, China used to have around $1.3 trillion of US treasuries. Today, it's holding over 700 billion dollars of treasury. But to understand how impactful this is, we must understand who's buying and who's selling. Today, if you look at the members who are trying to buy the US debt, their purchasing power is well low in the first place. And those who are trying to sell their US debt, their selling power is way high. And this is scary for the US market. And to understand this, I wanna bring another influence. Today we have seen Trump running first and introducing what we'll be calling the Trump currency, or the stable dollar. They use the stable dollar. Sometimes it's not yet called a CBDC, but very soon to be turned into a CBDC. This is because of the influence of the yuan CBDC. The yuan CBDC and faking all the Chinese yuan CBDC. This has been imposed in the Middle East. This has been imposed within Asia and Africa and South America. This has been, meaning they have been trading off the SWIFT. SWIFT is the normal system that has been controlled by the US and Europe. and this has been used as a tool to, if you're not in a, how should I call it? If you're not in alignment with the policies of the US that's likely to be implementing around the world, well, you could find yourself sanctioned from using the SWIFT. Countries like Venezuela, Iran, these countries have been highly taken up the trading system. Well, these countries have have joined countries like China using their trading system, well as selling them oil in especially Iran. They have been selling their oil in yuan, digital, in the digital yuan. This has implicated the presence of the US dollar. Today in the Middle East, if you look at countries like Saudi is selling a halfway of its oil in yuan. Iran today is selling its oil to China fully in digital yuan. Well, for the future of the US dollar to be getting high, if you ask me, in the first place, I would say, in my conclusion, the US has to sit down and think of the ICUS debt, how to solve it, because I don't think it's likely to stay as a reserve currency for the next 10 years when it cannot control how it spends. Regardless how you think of idolization has a thing or it isn't, only thing I would say, like, where we are heading, yeah, it's not the best road. You could call it the best road. But thank you for watching. See you in the next one.